Hello and welcome back to The Note, back in New York this week and just in time for a landmark. It looks as though Google has taken over from Apple as the world's largest company by market cap. This is how those two companies stood at the end of trading today in terms of their market cap. Then Google announced their earnings, which were considerably better than expected. So were their revenues, and judging by after-hours trading, their share price is up some 5%. That would be more than enough to take them ahead of Apple. Now, that's an exciting development, but in general, earnings haven't been better than expected here in the US, and in general, stock markets today haven't been exciting at all. The S&P was almost exactly flat for the day. That followed continued gains in Japan on the back of the Bank of Japan's shocking decision to go to negative interest rates on Friday, but falls in European stocks. Now, a lot of that could be due to ISM surveys, which we always get at the beginning of the month, looking at manufacturing data. And if we take a look at this next chart, you can see here in the US, the manufacturing ISM continues to signal contraction. Yes, manufacturing accounts for a much smaller chunk of the economy than it used to do, but as you can see, going back to 1980, this survey really does seem to map very well onto the ebbs and flows of the economy itself. You can see why this is contributing to growing nervousness about whether the US economy really is as strong as many people have assumed. Now, that leads into one final big issue, which is going to begin to bulk larger, which is that over the next few hours we will have the Iowa caucuses, and the process for deciding who the next US president is going to be will finally move into action. Now, if we take a look at the Iowa electronic markets, which has no direct connection to the Iowa caucuses, this is an electronic futures market run by the University of Iowa, which allows people to bet on who they think is going to be president. You can see it's been much less volatile and exciting than the campaign has been so far, and there is a general sense that the Democrats are more likely to prevail, about a 2 in 3 shot at this point. That really says little more than that the electoral map at this moment tends to favour the Democrats. If there's no other particular reason to vote otherwise, you would tend to think that the Democrats are more likely to win the presidency. Well, I doubt very much that this level of calmness about the presidential process can last much longer. The chances are that we're going to see more volatility there, and that will be reflected in markets.